The times ahead will be radically different from those that we've experienced in our lifetimes.
Ray Dalio leaned back in his chair, his voice calm, analytical, almost surgical.
The next red flag to go up is when the Federal Reserve and other central banks come in and buy again.
For decades, he's been one of the world's most influential investors, founder of Bridgewater Associates, author of best-selling books on economic cycles, and a man obsessed with understanding history's patterns. Unlike many commentators who rely on political ideology or short-term forecasts, Dalio studies centuries of data, looking for recurring sequences in the rise and fall of great powers. And his conclusion is stark. The United States is following the same trajectory as past empires at their peak, and the fall has already begun. Dalio's framework, which he calls the Big Cycle, maps how empires rise, dominate, and eventually decline over roughly 250-year periods. It's not about exact dates, but recurring stages. Empires typically emerge after a major conflict that establishes a new world order. They enjoy a golden age fueled by productivity, education, innovation, and stable governance. Over time, they accumulate wealth and global influence, often becoming the world's leading reserve currency. But eventually, success breeds excess. Debt piles up, inequality widens, political divisions sharpen, and external rivals gain strength. At some point, these pressures converge, triggering decline. Dalio points to the Dutch Empire in the 17th century and the British Empire in the 19th and early 20th centuries as classic examples. Both were commercial and naval powers with dominant reserve currencies. Both experienced periods of extraordinary innovation and wealth. But eventually, their debts mounted, internal divisions grew, and external challengers, France for the Dutch, the US for the British, rose to prominence. War, economic strain, and shifting alliances sealed their decline. Now, Dalio argues, the United States is entering the final stages of this cycle. After emerging victorious from World War II, the US established the post-war global order. It controlled half the world's economic output, possessed unmatched military power, and anchored the global monetary system through the dollar. The Bretton Woods Agreement cemented its dominance, and for decades, American power was uncontested. But the signs of overextension are now everywhere. First, Dalio highlights the debt problem. Great empires tend to borrow heavily to finance wars, expansion, and domestic programs. Over time, this debt becomes unsustainable, leading governments to print money to cover deficits. The U.S. federal debt has surpassed $34 trillion, and rising interest rates are making that debt more expensive to service. Dalio warns that this dynamic, debt rising faster than income, financed by money creation, has historically been one of the clearest signals of imperial decline. When the gap between what a nation spends and what it earns becomes too wide, trust in its currency starts to falter. This brings him to the second pillar, the erosion of the U.S. dollar's dominance. Since 1944, the dollar has been the world's reserve currency, used for global trade, held by central banks, and trusted as a store of value. This privilege allowed the U.S. to borrow cheaply and run persistent deficits without facing immediate consequences. But Dalio notes that reserve currency status isn't permanent. The Dutch guilder lost it. The British pound lost it. The dollar, too, is vulnerable. In recent years, countries have increasingly sought alternatives. China has expanded its use of the yuan in trade deals. Central banks have been diversifying their reserves away from dollars. Sanctions on nations like Russia have prompted some countries to explore systems less dependent on U.S.-controlled financial infrastructure. None of this signals an overnight collapse, but Dalio sees it as part of a slow shift, a gradual erosion of confidence that precedes every currency's decline. The third element is internal conflict. Historically, declining empires suffer from widening wealth gaps, cultural polarization, and political fragmentation. Dalio argues that the U.S. is now in a dangerous phase of internal conflict that echoes the late stages of past empires. Income inequality has reached levels not seen since the Gilded Age. Political discourse is increasingly toxic. Institutions are losing trust. Violence and unrest, while not yet at civil war levels, are rising. Dalio's research suggests that when internal order breaks down, It makes empires far less capable of dealing with external threats or managing economic shocks. And those external threats are growing. China, in Dalio's view, represents the most serious geopolitical and economic rival to the US since the Soviet Union. But unlike the USSR, China is deeply integrated into the global economy and has rapidly built technological, military, and financial capabilities. Its Belt and Road Initiative extends its influence across Asia, Africa, and Europe. Its navy is expanding. Its digital infrastructure is becoming a global competitor to American systems. Dalio doesn't argue that China is guaranteed to replace the US, but he sees clear parallels to past power transitions, most notably the British to American handoff in the early 20th century. Those transitions, he warns, are rarely smooth. Another critical factor in Dalio's model is the decline of education, productivity, and innovation relative to competitors. In the golden ages of empires, investment in human capital and technological advancement drives growth. Over time, complacency sets in. Dalio points to falling education outcomes in the US, aging infrastructure, and declining productivity growth. These aren't just economic statistics. They are indicators that the underlying engine of the empire is sputtering. Dalio also emphasizes the role of acts of nature and unexpected shocks, pandemics, natural disasters, or climate-related crises. These events don't cause decline by themselves, but they accelerate existing trends by straining governments and societies already stretched thin. The COVID-19 pandemic, for example, exposed weaknesses in the U.S. healthcare system, supply chains, and political cohesion. It also triggered unprecedented fiscal and monetary responses that further inflated debt and asset bubbles. For Dalio, the convergence of these forces, debt, currency erosion, internal disorder, external rivals, declining fundamentals, and shocks, creates what he calls a perfect storm. Historically, this is the point where empires either undertake massive structural reforms to rejuvenate themselves or slide into prolonged decline. So far, Dalio argues, the US has shown little appetite for deep reform. Instead, it has relied on short-term fixes, more borrowing, more political brinkmanship, more denial. So what comes next? Dalio doesn't predict an apocalyptic collapse where the US disappears overnight. Empires don't vanish in a single moment. They fade over decades. But he envisions a future where America's dominance is no longer guaranteed. The dollar may gradually lose its preeminence, forcing the US to live within its means for the first time in generations. Interest rates could rise structurally as investors demand more compensation for risk. Domestic politics may become more fractured, with power shifting toward states, cities, or new coalitions. Global power may become more multipolar, with China, India, and regional blocs playing larger roles. Dalio also suggests that individuals, businesses, and nations should prepare for this transition strategically. Diversifying assets internationally, understanding currency risk, and building resilience to political and economic shocks will be crucial. He often reminds audiences that while empires fall, life goes on. When the British Empire declined, British citizens didn't vanish. They adapted to a new global reality. The same will happen with the US.